You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Thursday, 20th day of December, 2018. You got 4 shopping days. 4. Count them. Not a lot. And have you got all your shopping done? Yeah, don't you love it when people ask that? It's either because they want to shame you because they have and you haven't, or they simply want some motivation to get up and get it done. And that's what I need. That's where I'm at. I need to get up and get it done. A ninja foodie. That's as close as I have to the Holy Grail for the wife, and that's not close. So any suggestions, any ideas, any thoughts, send them my way. Or if you just need to re-gift something, yeah, all right, let me know. Up on the big screen, S&P 500 Emini Futures. Welcome to the show. So glad you're with us. If you're returning, welcome back. If you're here for the first time, a special welcome to you. Whoever you are, wherever you are, we're just glad you're here. Right here, right now. So, If you can't see the chart, go to CFRN.net, homepage, right-hand side, big microphone. Click it, follow the instructions. You're registered through the end of the month. Keeping in mind that, of course, we won't be here Monday or Tuesday. We'll be back on Wednesday through Friday. And then we'll be out another Monday, Tuesday. And maybe that second Monday, maybe we'll just be here. Just because we can. And then, of course, New Year's Day closed. And then on the 3rd, Wednesday. No. The 3rd, Thursday. Yeah. We'll be back on Wednesday. Right. Which is the 2nd. Carry on. All right. Let's do this. If you can see the chart, which I hope you can. Oh, by the way, youtube.com/CFRN/live. If you are away from the desktop and just want to stream it on your phone or your tablet, youtube.com/CFRN/live. Okay? All right. Now, yesterday we had this very profound area. That price hit it, then it bounced, and then this is a daily chart. So we actually spent 2 days, day and a half, 3, depends upon how you want to calculate it. This is the end of yesterday's daily candle. I am using the @ES symbol as opposed to the ESH9 just so that I can go back further in time and grab more data. And we've had a swing low so far of 24.63 1/4. Okay. Now, what's this area here? What's that all about? I can show you that more easily. Or more simply, there is no easy in trading. So, this is a weekly chart, and we did this yesterday, but we'll do it again today. All right. So we've taken out the 38. That was the question yesterday. You know, will we get to the 38? If we get to the 38, will the 38 hold? Well, now remember yesterday we were here, or I'm sorry, last week we were here. This week, got that? Now, eyeball that weekly candle. Okay, so today's Thursday, Wednesday, Tuesday, Sunday night, and Monday. Right? And so we still have one more daily candle coming to complete the picture, if you will. All right, so back to the weekly. So we know where that Fib's at 50% Fibonacci retracement from the February 16 low. Fast forward almost 2 years, and here we are. Is this a bad thing? No, it's a good thing. This golden ratio, these Fibonacci retracements, they're everywhere. And after 2 years of climbing, a 50% Fibonacci retracement is a gift to the market, in my opinion. Or if it gets really ugly and goes to the 62, well, unless we break that 62 and hold under it, we don't have to revisit these prices. If we do take out the 62 though, guess what? We will revisit these prices. Now, if the market can go from 1,800 to almost 3,000 over the course of almost 2 years, could it really drop as much? And you know, these are weeks. All right. So How many weeks did it take to get there? Well, it gave it away, almost 2 years. How long could it? Markets fall faster than they rise, if for no other reason than gravity. Okay. So now that we've taken out the 38 on the week, but we haven't. Let's just make this a daily real quick. Can we do that? We did it. Okay. So now let's crunch up the daily. From here to here. And now here. Okay. So yesterday we closed below that 38% Fibonacci retracement. Today, or last night, at 6 p.m. Eastern, we opened below it. It managed to poke up over it by just a bit, and then kind of a downhill run. So it looks like the market is gonna attempt this 50% retracement. So while all those around you are losing their heads, don't you, because it's what markets do. It's a retracement that's long overdue, and better to get it done now than to go back up and then back down, and oh goodness, just let it go there, and then we could build another leg off of that would look a little something like but wait, there's more. Wow, there's just a ton of volume coursing through these markets because my platform it's frozen. Now, come on. I got a lot of horsepower under the hood too, but apparently not enough. 32 gigs of RAM. Video cards do their own processing. There we go. Are we catching up? There's volume on the day, 1.8 million. That's, you know, back in 2005, 2006, that was a pretty common occurrence. Probably 07 into 08, 09, and then it started to trail off. Okay, so we know we're going from here. Maybe if I took some of these indicators off some of these charts that I'm not using, it just might benefit. Because it's got to do all those calculations. Yeah. Maybe it did. Alright. So, we've got this big area here at the 50% fib. Now, this area right here, will the market attempt to get a toehold there? It should. I'm not a prophet. And guess what? That's about as good as you can get. Okay? Whatever appears to be a high probability, whatever you've seen, repeat again and again. Not just something you heard in a seminar or some guy on the radio or the TV talking about, but it's something that you've noticed and you said, hey, you know, this, yeah. So, I mean, look at how many days we traded in that little range. Caught a bounce, came right back to it, important prices, important areas, almost always tested, right? So we come, we get a bounce. Where do we bounce to? Potentially the 38. that make sense? Leg retrace, leg retrace. That chart that I've been showing you where it says a high, a lower high, another lower high. Yeah, that's it right there. That is that. But you know that, right? Okay, today's Thursday. Dr. Tom's going to join us as we wait for the S&P to do what it's going to do. Now, which area is this, you ask? Okay. Apparently we can't walk it down. Yeah, there we go. So, that area, that's 2450, not 2400. Now, one last time, we'll go back here, in case we did not elucidate on that clearly. What price is this? This 50% fib retracement, which is an area, by the way, 2374.75. So that means we break 2400, right? And in doing that, in taking out 2400, if that's what the market chooses to do, that breaks a lot of backs. You know, there's a lot of people saying, oh yeah, no way we're going back below 2400. So if it were to come to the 50, it would be just enough under the 2400 that somebody who's putting their stops, you know, just below the round number, yeah, you probably get whacked. Doesn't mean they, whoever they are, ran your stops. It just means that you put your stop in a place that the market went to. That's all it means. Okay? And if you find yourself doing that too many times, either your stop's not wide enough, your market conditions are too volatile for whatever stop it is that you're able to place, and so you have to factor that into the equation, what you're going to do, how you're going to do it, what you're going to trade, etc. All right, Michael, I don't know if you're here yet. Michael had to run an errand, and then he's going to be back. I don't think he's here yet. John's going to be with us, last I heard, bottom of the hour. And then Dr. Tom will be here at 1 p.m. Eastern, and we will continue with the discussion we had last week regarding end-of-year tax planning. You have a few more tax planning days than you do shopping days. So, in a little bit of news, Coinbase has announced a new initiative meant to incentivize people to learn more about cryptocurrencies. The Coinbase Earn educational platform will reward users with tokens for completing various tasks such as watching videos and taking quizzes on crypto-related content. The service has launched in invite-only mode with just a single asset for now, but Coinbase promises that over time it will add more options. Users who received an invite by mail can already go to the ZRX page to earn small amounts of cryptocurrency. Anyone else can view the educational content on the page for free, as well as sign up to be on a waiting list to be notified as more educational tasks become available. Now, the exchange said that we think Coinbase Earn could help open up blockchain assets to a new group of users, people who are curious about digital assets, but who'd like to try them out for free, just like a normal web or mobile app. By serving that need, we hope to make blockchain more accessible in the process. The exchange also revealed that for the first set of tasks, funding is unsurprisingly coming from the OX external development pool. Now, not OX, but OKEX, OKX, OKEX. There you go. The Malta-based crypto exchange supporting fiat currencies such as the Vietnamese dong and the Chinese yuan has announced it's launched an instant messaging service. Developed for its over-the-counter trading platform, the new feature allows users to establish direct communications between buyers and sellers. This is a bit like local Bitcoin, but not local. The instant messaging service allows traders to send and receive messages in real time with their counterparty on OKX's website. Why do they have to do that? You can't survive in this. Well, no, see Coinbase. Now they jam two words together with no space, but you can pronounce it. Anyway, the apps are available for both the iOS and the Android operating system, but developers say that by enabling push notifications, traders will be alerted immediately through their mobile devices once they receive any updates. That's you, Michael?
That is me.
All right.
Yes.
Yeah. Pop on in and, if you will, and
Okay.
give us a recap. I think John is coming around 12:30-ish, and then Dr. Tom will be with us around 1-ish.
Okay. Okay. Good stuff.
And it's all yours for now.
All right. Excellent. Thank you. Okay. Good afternoon, everyone.
Did you open up did you take the screen?
Yeah, I did.
You did. Oh, yes, you did. Yes, you did. Okay. Hang on. There we go. Okay. All yours.
All right. Here we go. Good afternoon, everyone. Today is Thursday, the 20th day of December, 2018. Yeah, today. Well, first, if you have not taken a free trial with us, go to the home page here at CFRN.net, and right over here in the right-hand column, it says 5-day free trial applied at CFRN.net. If you click on that, you will be brought to this page. On this page, all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to click that confirmation link. Okay? Okay. Spreadsheet. If you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of December 2018. We made 8 ticks in the euro, 35 ticks in crude, and 17 ticks in gold. And that put us at $570 per contract this morning. Didn't do anything with the ES today. And I'll go over that in just a minute. Today it took 35 minutes and 5 trades to get to the goal for the day. We were up $100 per contract at that time. And we took a total of 11 trade setups today. So on the month now, we're up $2,605. That's over 13 days, averaging $200 per day. On the year, we're up $37,578. That's over 235 days, averaging $159 per day. $159 per day. Okay? Now, if you were to add 1 contract per month and do everything exactly as I did, this is where you'd be. Trading 12 contracts and be at $245,000. If you just started out with 10 contracts and did everything exactly as I did, this is where you'd be with $375,000. Okay? Okay. Now, I'll scroll back up here so we can go over it again in a few minutes. Let's go over the gold today. Okay. My chart is frozen. Let me look around, see if I got any windows open anywhere. Nope. Okay, it just took it a minute. It's still taking it a minute. Here we go. Okay, on the gold, we had, oh, this is going to be awful. Let me go and close some things. That might be hogging up memory. I got one of those open. Huh. All right, well, anyway, we're just going to have to deal with it. On the gold, our first trade setup was right in here. Okay, right in here. And we picked up 5 ticks on that one. The next that we saw was right over here. We picked up 4 on that one. And the next one, so that put us at +9. The next one was right here, and we picked up 8 on that to put us at +17. All right, then we got into the break here, and there was really nothing during the break. Maybe a momentum long from right here just a few minutes ago. Okay, but you can see that the gold is headed toward the high of the day right now. The euro had a lot of movement during the break. Wow. Okay, well, the euro started out right here. We started out with a break even on it. And then right here, we picked up 8 ticks. Okay, and it looks like we missed the follow-up right there. And then the slingshot got messed up, so we weren't doing anything else on that side. Then we get into the break right here, and there was a nice long opportunity there, and there, and there, and there during the break. Okay, and right now, it's got just a little bit of bullish divergence, but the cycle's going down too steep to want to go long. So it looks like it's probably trying to do a cycle reset here. And what that means is you should have a big leg up and then maybe get some more long trades. Okay. Now on crude today, we had a bunch of break-even trades, but we had one really good trade, and we'll get into that in just a minute. Okay, so on crude, there was a long here that we missed. Then we grabbed this one right here. Okay, we picked up 5 ticks on that. Then we had a break even there, a break even here. Looks like there was a long here that would have been a break even if I'd have gotten into it a momentum long. There was a bounce off the PBC right here. I don't know why I didn't see that this morning. It was actually that one. And that worked out well. And then there was another momentum trade and another momentum trade, both of which worked out well. Down here, a momentum trade going the other way, which worked out well. Then I got a break even. Then the slingshot was not giving up anything. And then we got all the way over here. And on this particular trade, I picked up 30 ticks. 30 ticks. Now this right here is our highest probability trade setup. Okay. And can you post here the URL what you're reading? I have 32 gig of RAM. That's the maximum I could have in here. But anyway, right here I picked up 30 ticks, 30 ticks. That put us at plus 35, and I missed a couple more as we're getting into the end of the morning session. Now this area right here, you see that highlighted area right there? Let's put it on a 15-minute chart. I drew this yesterday before the crude inventories came out, and I said this is an important area and price is likely to come back down to it. And that's when price was up here. Well, price was up here. And then the inventories came out and it went up, it came down. Then the FOMC came out and it went up and it went down. And you can see how many times it's come back down and hit this level. It is just attracted to that level for some reason. Okay, but that was it for crude oil. We ended with plus 35 on crude. On the ES, we didn't do anything today. The ES was bouncing around so much. I mean, it was really, really violent this morning, it seemed like, for lack of a better term. And so I didn't try to do anything with the ES. I was just watching it. I'll go over the trade setups that I have outlined, and I think that'll be it probably. Hold on. Scrolling. Okay. Yeah, see, it started out here with a shorting opportunity. Would have been a break even. Started out here with another short. I'm sorry. Then we had another shorting opportunity. Would have been a small profit. Then it had trade setups in here. Okay. But it was bouncing around so quickly. I didn't trust it because it was flipping back and forth across the BBC. There was another one here that I had outlined. Small profit. There were trade setups in there, but I'm just doing the ones that I outlined. There was one here that I outlined that would have been a nice trade. Another one here that would have been a nice trade. Another one here would have been a break even. And there were some in here, but it would have been break even. Another one here that would have stopped you out. One here. That would have been a nice profit. One here. That would have been a nice profit. And I think that's where I stopped watching it. Okay, so we got a low on the day of, so far, 24.63. I don't expect that that's going to be the low of the day. You know, Dwayne and I were talking about, you know, if this 30-minute bar closed below the opening bar, which was over here, then that would be a bad thing. And it went down there. It didn't close below it, but the next one did, which is just as bad. And went down and put in new lows on the day right here. Okay. Yeah, so that was it this morning. There was a lot of activity on the ES. There was a lot of activity, you know, on all the markets. Really, it was jumping around. So we'll go back to the spreadsheet for a minute. Okay, if you're going to read the spreadsheet, you read all the CFTC risk disclosures down at the bottom. Today is the 20th day of December 2018. Today we made 8 ticks on the euro. We made 35 ticks on crude and 17 ticks on gold. That put us at plus $570 a contract. Today it took 35 minutes and 5 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 11 trades this morning. We missed, you know, a bunch. We missed easily twice that, 3 times that probably. On the month now, we're at 2,605. That's over 13 days, averaging $200 per day. And on the year, we're at 37,578. That's over 235 days, averaging 159 per day. Okay, that's 159 per day. Now, if you were to add 1 contract per month and did everything exactly as I did, this is where you would be, 245,000. If you had started out with just 10 contracts and did everything exactly as I did and got filled on every single trade exactly as I did, you would be at $375,000. Okay. Yep, and that's it. That's it. If you have not taken a free trial, go to the home page at CFRN.net. Right over here, it says 5-day free trial. Apply.CFRN.net. If you click on that, you will be brought to this page, where all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit the submit button, you'll be sent a confirmation link. Now, you can also get to that page by clicking down here. If you click on this, it's going to bring you to another page. This page, where it says start free trial. You click on that, and it's going to bring you to this page. Okay, just so you know. All right, looks like that is going to be it for right now. With that, I can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. It's where Studio A is. Dwayne is probably currently residing.
Yep.
Okay.
True story.
Excellent.
Hey, Roy. You still there?
Roy.
Roy.
No, there's no Roy. Vic is there. Oh, no, there is a Roy. There is a Roy.
Yeah, he's there. Looks like he's there. So,
yep, looks like
Roy had commented, 50% is not a Fibonacci number. That's correct. 55 is. That's also correct. But if you do a little deeper research into Fibonacci, the golden ratio, the retracements, the extensions, the math that is used, of course, in this work, then I'll show you an example, which I'm sure you're probably already aware of. If we go from the low to the high, not I, but those who came before me, far smarter than I, they put a 50% on there, not a 55. What are you going to do, right? So a 50% retrace, a 50% Fibonacci retracement is the kindest thing that could happen to this long, strong bull market, and we're just marking it from 2016 here. We drew off of that leg right there. You could wander further back. As far as this data takes me, is stretching. Now again, I'm on the at ES, not the ESH9. And so we see a low here, and we can see that prices were lower here. And some of you have platforms that'll take you, further back. You can draw all the way from the 666 low up to the current high. Okay. Does that give you a different set of numbers? It does. Absolutely. It's the bigger picture. However, for our work here, going back a couple years, because see, this was a lower low. You had this leg and this retracement, which put in a higher low, but then we came down, and on this double bottom we put in a lower low. And so, not being one to count waves, this is just a good starting point for me. Now, if in fact the market wants to get below the 50% retracement, or the 61.8% of the golden ratio, well, then of course we know that we're staring at these lows, but then we have to step back further and embrace the whole picture, which means you got to get a chart that's going to bring you in more data that's going to show you that 666 low. But wait a minute, wasn't there a low before the high that put in the 666 low? Yeah, you're right, there was. And so how far do we have to step back? Well, again, this 50% Fibonacci retracement, which if you're looking at the whole picture, maybe it's a 24. I don't have the date on my chart, so I don't want to quote it, but this is where we are. This is what makes sense. You had all of this consolidation here, right below the 50, before it was the 50, and then consolidation above. These are daily candles, so there's lots of days in there. Where'd that weekly go? Oh, is this the one we were using? Well, we can just make this the weekly. Just that quick. You don't see John, do you? Or do you?
Hang on, let me scroll up.
And this is weekly.
Oh yeah, I do.
Oh, okay.
I do. Why aren't? Oh, it's because one's John and one's Jonathan. Okay, that's it. You want me to open them up?
Please.
Okay. Okay. Mike is.
Hey, John. Welcome to the show. Sorry to leave you hanging. Slipped my mind.
Well, we just made a new monthly high in gold, multi-month high in gold just a second ago.
Let's take a look at that.
Just about to hit 1266. That's pretty good price. As a matter of fact, it's $100 off the. It's about $100 higher than the low back in August, which is quite considerable, especially now that the shorts are getting more pressured every day. They're starting to haven't started to panic yet, but I think panic could set in here in the next few days. I mean, this is a really strong close. Here we are on a Wednesday, just Thursday. Actually 12:60. Sorry, Thursday, going into the end of the week, and you know, if we close above 1275 by tomorrow, I think we're going to hit 1300. You know, in the next few days after that, next week. 1300 is a big deal. You know, almost all the shorts in the gold are probably below, below 1300, most of them, which means that there could be an absolute eruption in price. Look, you've got a policy here that the Fed just implemented yesterday, which was, by the way, if even though we were saying, when we were talking yesterday, we were kind of saying what might happen if the Fed didn't raise rates, right? And I did put out on my Twitter, actually said, don't be surprised that we go to new lows. I did mention that maybe even before we started talking about it yesterday. What I actually did, as if you notice, we had a bit of a rally right after the news first came out yesterday. A bit of a bounce. We sold that bounce and went short, and we basically only covered, we've been short shorting the rallies ever since, and and buying the dips. Had a few dips overnight, and just covered the last shorts down here. But look, guess where the price is today? The S&P is at 24. Got down to 24.60 a short while ago. I mean, we're almost down to 24.50. So we're getting pretty close. The Dow just broke 23,000. That's sort of, quite an eye-opener. So we're in the 22s. That's where we said we would go quite a long time ago. And unfortunately, we're within we're definitely within reach of I don't know whether we'll get down to 22,000, maybe 2250, something 22,500, something like that. But this is a pretty big deal. And so what we've got going on here, we've got, the initial reaction on the metals was a sell-off yesterday. Mm-hmm. But for those who may not have noticed, we still closed higher on the day yesterday in the metals in spite of the pullback. So that was kind of a sneaky type of bull market continuation that sometimes eludes people. And I had a feeling overnight that we were going to, we were down at 1248 or so, 1247. I had a feeling, so I just put buy stops above and came in this morning and saw we were up at 1264. We pulled back a bit to 1260. It tested the 1260, got to 1259. But now on a policy that just isn't a day old, this is a multi-month policy that was put in place yesterday. You've got gold making new highs. I mean, that is just, the opening salvo. So this is, I guess the market is saying, why did the Fed really raise rates? Is the economy, look, what happened with the employment this morning?
I'm sorry, ask it again.
The employment numbers, what happened this morning?
I haven't looked at them. I wasn't in the...
If you can pull up investing.com.
I got them coming right now.
Because that could be telling. It's funny, in a way, because he kind of stuck it to us yesterday, and...
well, if it hadn't have been for the press conference, I mean, the markets were digesting it pretty good. But boy, the more he talked, the worse it got.
Yeah, the
okay, employment numbers for today. What do we have? Initial jobless claims came in at 214, and they were expecting 219,000. That was the forecast.
See, down 5,000 less than expected. That's pretty bullish for the economy.
The previous was 206,000.
The
jobless claims 4-week average 222,000.
Yeah, I'm not seeing those. Are you putting those up or not?
No, but I can. Yeah, hang on just a second.
Yeah, so
what you want
so the point being that the Fed, maybe they are a bit more wary of inflation coming from behind, and the likelihood of that happening in
the chart.
Yeah, I mean, look at it. That's it's pretty dramatic. Can you put the whole thing up at the maximum?
Yep. There it is.
No, Max. I think you're. Sorry, my apologies. Yeah.
I just drug the little slider across the bottom. I think they do the same thing. Yeah, I think so.
Yeah. So, boy, look at that spike back in 09. Wow. So it's
6,000.
Remember on a population adjusted basis, this is all-time lows by far. So it's extremely bullish. I mean, we've never been here in history. This is all-time record lows on a population adjusted basis. You cut that number in half to get the real today, to get the comparison against all the previous lows. I mean, that's really amazing, right?
Yeah, it is. So it is.
And so maybe they are justified in making this, doing this rate hike. However, and look, the good news is the dollar is going down, which should happen if they start raising rates. I know that people think that's not the case, but go and look at Argentina if you don't believe me. Rates are 25% there, and the peso's in the dust. So and most of the, there's, I think, Turkey and Iran and Argentina all have sort of double-digit, 20+% interest rates right now. Mexico, Russia around 8%. A few other countries up at that level. So, there are countries that are facing much higher, sort of 1980s style of interest rates. And there's always a chance, we've said it before on the show, there's always a chance that remember, in a way, I know it's hard to sort of grab this, and in a way, the raising rates is a little bit like throwing gas on the fire when it's kind of in sync with the economy kind of thing. In other words, if this economy has reached a point where it's kind of unstoppable, which based on what he was saying yesterday, you could say, I wouldn't say it's unstoppable, but it's certainly pretty strong in spite of everything going on. And the markets are the casualty right now, not the economy. Raising rates, has achieved something today, and it's got the dollar down. The second thing that it's achieved, actually, which is rather intuitive, is because this is a kind of a shock horror type reaction, like from everybody, like we're just gobsmacked. We got Dalio, Gundlach, and everybody's saying don't do it, and he goes and does it anyway. What that actually creates the setup for is say that come the next meeting or a couple of meetings out, he decides to do the opposite and start lowering rates. That would really be a very powerful force. Kind of contrarian force. In other words, actually reversing yesterday's decision in a few months' time could be an epic event. Could be an epic event in terms of creating the next boom, if you like, laying the foundations for the next boom. And, he's added an extra bullet to the gun yesterday. So that may be a lot on his mind, because, if you sort of got to 1.9% interest rates or 1 3/4, and you start lowering, you really don't have a whole lot. You don't have a whole lot of firepower. You know what I mean?
That's true.
So he's got a lot more firepower now to get rates down fast, if need be. So, listen, you got to deal with the cards you're dealt. We've been dealt this card. The markets have a kind of a will to go down and meet our targets, and unfortunately, they're not too far away. But what you've got to be paying attention to now is, when everybody gets kind of freaked out by what happened yesterday and today, you've got to be really bullish. You got to be looking at the potential for stocks to bottom and catch the next up move, because when it comes, it could be a really big upside surprise, especially if something happens with this continuing resolution or shut the government down. If that becomes, Trump hasn't said he's going to sign it yet, and he basically got, what's the word, deceived. It's unfortunate, it's really tragic the way this funding has worked out, because he basically probably could have gotten the 25 billion a while back. Somehow that was sort of outmaneuvered by intrigue, and then he said he'll sign the omnibus bill on the condition that you provide the funds next time. Well, obviously they hoodwinked him there, so that's rather unfortunate, and we'll have to see how it plays out. Did you hear about this guy who started a GoFundMe for the wall?
I heard somebody mention they thought it was a clever idea to. No,
It's probably the fastest growing GoFundMe ever. 4 million in 4 days.
4 million in 4 days. You know, that's one of those things you gotta say, why didn't I think of that? He can't be the only person who has started such a. There's a lot of different sites like GoFundMe. I'm sure somebody else out there has done it. Probably did it before him. Yeah. The question is, what made his catch fire?
Yeah.
4 million in 4 days. That's pretty impressive.
Yeah. By the way, a lottery winner who won 451 million supposedly started following me today. I don't know whether it's for real or not. I thought I'd check it out.
Is that what they messaged you, that they had won it?
Supposedly, yeah. It might be a a parody or something.
Yeah. But now here's a GoFundMe. I see one they're quoting. What day is this? That costs rough, John. Have you seen the document?
Oh no, I'm having a rough time with it. But
16 hours ago, GoFundMe campaign for border wall raises $1 million and counting towards $1 billion goal. And then 41 minutes ago, a GoFundMe page to fund a border wall has made $4 million in 3 days. I wonder if those are the same campaigns or different.
They probably are. Yeah, because they got the $1 billion goal. That's the one.
Let's see. We the people will fund the wall. A campaign aimed at raising money for a border wall on the crowdfunding website GoFundMe has raised more than $4 million of its $1 billion goal in under 4 days. The page called We the People Will Fund the Wall was started by Brian Colfage, a Purple Heart recipient and triple amputee who lost his leg and an arm during a rocket attack in Operation Iraqi Freedom. The campaign was launched earlier this week with the goal of raising $1 billion. Well, 4 million in 4 days, he's on his way. Now, that's the early adopters. That's the people who watch Fox News all day. How does he maintain his momentum? His story is enough to ignite the fire.
It's probably going to. It's a little bit like the the one that got to 400,000. Sometimes these things just hit their stride and they have a life of their own. And this one, timing wise and just. They just hit it. They hit it right, and it's got a life of its own right now, and it's getting a lot of coverage.
He said the cap is set at $1 billion because that's all GoFundMe allows. He said he's trying to get them to raise the limit. If 63 million people who voted for Trump each pledge $80, we can build a wall. That equates to roughly $5 billion. Even if we get half, that's half the wall. We can do this, he encourages. So
yeah, interesting.
Great story.
He's put it together, and listen, if you're lacking 2 or 3 limbs and you're able to put this together, you gotta salute the guy.
Yes,
and
absolutely
give him his what an amazing guy for doing it. So kudos to him. Speaking of Twitter, a little milestone reached overnight. We cracked back up through 5,000. For the first time since I was at 20,000, 22,000 or so, 23, when they knocked me down. But I'm clawing my way back up.
Good for you.
So, thanks. It's hard work, you have to really work hard to get, to get the momentum going and everything. But it's been going quite well lately. You just can't win in this Twitter thing without putting a lot of effort into it. So, when you see these, it's crazy when you see some of these people who got, who don't do much really and somehow have 100,000 followers. It's just staggering. But, don't forget, even though it says I've been in it since 2009, I only got going last year. So.
There's a lot of magic in the digital soup, so, don't always believe, just because it's on the internet doesn't make it true. So
Yeah.
There's people out there with an awful lot of bots following them and every other kind of nonsense. So, you know, it's real people that you can interact with. That's really what matters. So whether your tribe's 500 or 5 million, you know, a tribe of 50 could be worth more than the 5 million if they're truly engaged with you and whatever it is that you offer, be it a product or service.
Yeah. Well, you know, we're offering a very narrow kind of appeal thing, so
goodness, the stuff we talk about, most traders just kind of look at you with a.
Yeah. So
I remember when I started,
probably having 5,000 is more like having 50,000 normal followers or something. You know, it's so because our audience is so narrow, but you know, you have to kind of offer a bit of a blend of everything to keep the troops happy. Just on the going back to the metals, I actually said last night that I think, or this morning, that we're turning dynamically bullish on the gold and silver, on the metals in general, and I think we are. And by the way, even though the platinum, see, this is what a bull market. When you start to see a bull market unfolding, you know, I've mentioned platinum recently, which has been, you know, the dog of this bear market in gold, and the last few days, every kind of dip in platinum has been bought back pretty quickly, and we had a dip in the metals yesterday, got bought back pretty quickly. That's a very good, you know, when you see that happening, that's those are the kind of things you got to be buying. You know, you can buy with more confidence than you know, just sort of stabbing at pullbacks and getting your head handed to you, you know. It definitely, because that's been the feature of the rebound, of the stealth rebound $100 ago in gold. The way we've gone up, you almost didn't notice it, you know. And so this is a classic bear trap for the shorts, where the market, I keep saying the market's given them more rope to hang themselves with. So a lot of these people have probably been shorting these rallies, and then all of a sudden they find they didn't make any money, and they're actually even more in, you know, they're deeper in it than before. And this is a classic prelude to some sort of an eruption to the upside. And look at the gold stocks. It's been the same story with the gold stocks. You know, yesterday the gold stocks acted great until the Fed came out. Then they tanked. And I remember looking at the dust and thinking to myself, oh, you know, here we go again. But the dust, and I sort of looked at it last night, and, you know, I said, is this a top right here? Probably is. We actually went in and you know, just bought those lows in the gold and sold the highs on the dust. After buying them near the lows during the morning, we actually did the opposite. You know, we sold the highs of the gold yesterday and bought the lows of the dust, and it was an incredible day, because the J dust went from like the low 50s to the mid 60s in one day, and now guess where they are? They're back to the, you know, high 50s right now. So this is the death knell of the dusts, because as I think we showed it on the chart the other day, I mean, listen, if we start hitting new all-time record lows in the dusts next week, you know, it doesn't.
Here's the dust up on the screen on a daily.
Right. So
goodness, look
at that. Exactly. I mean, you know, when a structure breaks down from a long-term consolidation like that, if you put it to was that a month? Is that a day, a week ago?
That's daily scrunch.
Can you spread it out a bit, or
sure?
Yeah, you see the downturn there. It's you know, those are all-time lows around the 20. So, you know, we could really break down big time into maybe into the 10s or even the 5s on these dusts, and they'd have to, you know, split them again at some point. I mean, let's just go back to that one there, just back a little bit. Where yeah, I mean, look at that. I mean, this is deadly, boy. You know, so we could be looking at something really, really big on the upside in the metals, because the opposite of the dust is the nuggets. And the last time this happened was in 2016, and we went up, I don't know, 12-fold, 15-fold on the nuggets, something like that. So this is a very, very, very big deal indeed, what's going on here. And, you know, as I was saying earlier on, for the benefit of the audience, you know, look, there's an outside chance that the Fed could not only be vindicated or proven correct and vindicated, but imagine if they get caught in some kind of a scenario where, you know, the economy actually does strengthen. Let's say the dollar goes down, right? And the Fed raises rates even more next year. And the economy powers on, you know, because a weaker dollar makes the U.S. more attractive for a lot of reasons. You know, a weaker dollar lowers the cost of manufacturing in the U.S. and raises the income into the U.S. because all the 2/3 of all the revenues are coming from overseas. So it's a well-conceived plan. And if that, and remember, if the oil price recovers, and the U.S. increases another 1 million barrels a day in production, that's money for old rope. You know, that's all going into the economy. And the whole problem with the U.S., you know, the amazing thing about the U.S. economy is, in spite of $500 billion a year going out the door into China to rebuilding China, or building China, right? Building China,
right.
And $250 million is going out the door into Mexico, building Mexico and Latin America, and another $250 million or $500 million is going over to Europe. I mean, the U.S. is carrying the world, just like it did in the 90s. So if we suddenly see a situation next year where the dollar gets weak and all of a sudden the U.S. gets strong because there's more revenues coming into the U.S., we're cutting those outgoings. And remember, we don't have the scourge of the 2000s where we were importing 10 million barrels a day or 12 million barrels a day or something at an enormous cost, where we were kind of building the Middle East, right?
Right.
It's kind of interesting when you look at the center of the world as the U.S. economy, which is powering the rest of the world in one form or another. If some of that starts to come back into the economy here in the next couple of years, you know, Trump could be sitting on a monster economy. And
you need to get that.
Just a second, I got to take this.
Yeah, go ahead. Let me check and see if Dr. Tom is here. I know he's on his way. He might even be here.
The doctor is in.
The doctor is in the house. Hey, Doc. What's up?
How you doing?
I always wanted to say that. Hey, Doc. What's up? I don't have a carrot, though. I need a carrot, right? Is that how that bit went? The shtick? Bugs Bunny? Yeah.
Oh,
what's
yeah.
up, Doc? Yeah, there we go. That's my wife.
I forgot that.
Oh, how
Sure.
Oh, so
I'm more of a Donald Duck guy, you know.
Yeah, I already asked you and I already know, but I don't want to spoil it for anybody. So everybody wants to know, how was the Messiah?
We had a fantastic time. To me, it's the most beautiful piece of music ever written. And if you have a second, I'll tell you a great story about how the Hallelujah Chorus was written.
Okay, I do have a second. I have 60 strung together. No,
okay.
No, 600. Yeah, I have 600 seconds.
Well, George Friedrich Handel wrote the Messiah in 27 days, which is an amazing feat in itself, because he wasn't just writing all the choral parts, he was writing every single instrumental part. And there's lots of instruments in the orchestra, right?
Mm-hmm.
But
right.
The Hallelujah Chorus was written in 24 hours. He shut himself up in his apartment and he started writing, and because the Spirit of God was on him, just giving him inspiration. And his servant came and brought him breakfast and he ignored it. He came back with lunch and the breakfast tray was still sitting outside his door. So we left that. Same thing with dinner. And he worked all through the night. And the next morning, when his manservant came to check on him, he came out of his room and he had tears just pouring down his face. He said, "I believe I have seen the great God." And God just gave him the Hallelujah chorus, which is just an unbelievably beautiful thing. And the other thing, I was telling some of the choir members that I was singing in an 80-voice choir with a 20-piece professional orchestra, and I was sharing with some of them, you know, that Handel didn't actually write the lyrics to the Messiah. I said, "What? I didn't know that," because they all knew he wrote the music, but they just assumed he wrote the lyrics. But I said, no, every word in this came directly from the Word of God. It's all Scripture. And they were amazed to know that, because all the words just come together so beautifully and poetically, you know, that it's kind of hard to do that with Scripture, to make it into a song, you know. So anyway, I think a lot of people were really moved, and it was very tiring, you know, standing up in a wool tuxedo with lights on you for an hour and a half. I was pretty tired when it was all over, but also pretty happy.
Did I lose you?
I don't know.
Oh, I hope not.
Did you hear me? Did you hear me say I was pretty tired but pretty happy?
Yeah, I did. And you know, when you first mentioned that, I pictured you possibly doing a couple shows a day or something like that, or you had a day's break between. But yeah, I can, standing under those lights in front of all those people, you know, the tension, the expectations. Yeah, I would have got tired just watching you do it.
Well, when you're singing it like in the top of your range, it's actually hard physical work. People don't believe that, but it's not easy. Particularly, I do tenor, so it's very high. So we did that on Friday, and then Saturday, I was invited to sing in a flash mob at our local mall. And then at the last minute, they said, "Oh, can you lead it?" So I brought my guitar, and we did this flash mob doing Christmas carols, which was a lot of fun. And then Sunday, we did the Messiah again. So I had a whole weekend of music.
Now, so did you just like amble into the food court, you know, guitar strung across your back, you know, like a bandolero? And then you just kind of just sit down on one of the big planters with the trees in it. And just very casually, you pull your guitar around and you just kind of start to strum it. Just very lightly at first. And people start perking up and turning their heads. And where's that music coming from? And then you just rip into it. Is that how it went?
Pretty much. All the people who were singing, they asked them to just sort of be incognito,
right,
and spread themselves out among the crowd. And it also had a second floor with balcony going around the top, so we were completely surrounded by singers up there. And the way we started it, you can't be incognito with a guitar, so they suggested that I just get the guitar out, open up the case, sit it on the ground, the way sometimes musicians do. They'll start playing and people throw money in their case, you know.
Yeah, right.
And so kind of fool people into thinking it was something like that. They call it busking. I've never heard of that.
No,
but
I haven't either. I do know the acoustics at a subway are phenomenal.
Yes. So they asked me to start it off solo without anything. So I just started as loud as I could sing, which is pretty loud, with Go Tell It on the Mountain. And I sang the first two lines, and then another guy came in, and then we started playing the guitars, and then everybody started singing once we got into the third verse. But that's how it started off, just without even guitar, just me singing Go Tell It on the Mountain, you know.
Now, you know,
and
I was just looking for that perfect Christmas gift. I'm sure if I'm thinking of it, someone's already thought of it. Probably has a franchise across America that I don't know about. But now I know that my wife would very much enjoy seeing a flash mob live, whether it was the Messiah or I don't know, a scene from Holiday Inn. We watched that the other night. Do you remember that? Remember that? That movie?
I don't.
Holiday Inn. Who did it have in it? Fred Astaire and I guess Bing Crosby. Yeah. Anyway,
I never saw it.
Weigh you down with that. But see, the problem with the flash mob is that the thing that makes it a flash mob is that it's a surprise. So it's like you can't order one for yourself. But what a great gift! See, if I could hire a troupe, you know, your mob. If I could hire your mob, right? If you had some incredibly affordable price for, 30 minutes of your time, see, then I could order that. All I have to do now my job is to get my wife to the mall, to the food court, that's like two places she would never go. No, she'll go to the mall. She just won't go to the food court. But I'd have to trick her somehow. Or the train station, or, wherever you just got to make sure it's a place that you can get her or him to, so that you're just sitting, you're just hanging out, you're having a little coffee, cappuccino, a biscotti, something, and then all of a sudden, bang. And when it's all said and done, and the wife spins around and looks at you in wonder and amazement because she was just on the set of Holiday Inn with Bing and Fred, and you look at her and go, "Merry Christmas, babe." And she realizes that you did all of that. And of course, you got one handy guy back in the corner. He's filming it all. We're rolling, right? And so not only does she have the experience, she's got it on VHS, for posterity. Go ahead.
VHS.
Yeah,
you're dating yourself there, Dwayne.
Yeah, boy. Yeah, I went Betamax. The world went VHS. I went Betamax first, and oh well, you know how that worked out. So.
Well, I actually did something like that. We were just talking about this a little over 25 years ago when my wife and I got engaged. I hired this violinist, and he was a real famous guy. He played for like 4 different presidents and so on. So I hired him to come up from Miami, and it's the only time I ever lied to her. I told her I've got to go to the bathroom, and I didn't. But I had to go out there and meet him, and tell him what room we were in. So he came into the little dining room that I'd rented for me to ask her to marry me for our engagement. And so he starts playing, and she was enjoying it. And after a while, she's saying, "Well, I wonder when he's going to go on to the next table." I said, "He's not." She thought he was just one of those roaming musicians. He's here for you. He's here for you, And so then when I actually got the ring out, I sang a song to her with him accompanying me, which was...
Now, see, not all of us can do that.
Well, no. Only the good-looking ones.
Right, yeah.
But yeah, I'm sure you could hire somebody like that. I was pastoring a church one time, and we decided for Christmas to do a special thing for the kids, and also just to get more people to hear about the church. So we hired this fire engine. It was a retired fire engine, but a real one. And Santa Claus came in a fire engine and was giving out candy, and they let the kids climb all over the thing and turn on the siren and stuff like that. And I don't know, it cost a couple $100, but it got people to come out that didn't go to church, and once they saw we were a bunch of nice people, they started going to the church. So it worked out well. So if you can hire a fire truck, I'm sure you can hire a choir.
Now that you mention that, somehow, somewhere in my childhood, way back, foggy, I remember Santa Claus being mixed up with a fire truck. I don't think I've thought about that since I was a child and it happened. So I'm either inventing memories, which is something you have to be very careful with when you go and lay on the shrink's couch, that he doesn't start, sowing seeds in your head that blossom into full-blown nightmares that never happened, and people end up going to prison for it. I mean, goodness.
Right. Yeah, I hear you.
Because I feel like I'm on that fire truck, I'm hearing the thing, but it never crossed my mind back then that somebody had to pay for that.
It's actually pretty common to have Santas on fire trucks.
Oh, it is?
When I was, both when I was a volunteer firefighter and later when I was a professional firefighter paramedic, we would have somebody dress up as Santa Claus, and we would go around to schools and things like that. And but that didn't cost anybody anything. It was just something that the firefighters did.
Goodness gracious, man. How many lives have you lived?
Not that many, you know.
Come
less
on.
than
No,
20.
no, 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 no. You're beyond the Renaissance, man. Every time you're on a show, I mean, there's another a facet to the life of Dr. Tom. We peel back one more layer of the onion, and whoop. Now today, nobody was expecting it, but bang, out popped a flash mob, and then a fireman. What next? We don't know what to expect, but that's good.
Nope.
That's what keeps us tuning in.
Yeah. Okay. By the way, you mentioned, you know, your experience with your psychiatrist there. I went to see a psychiatrist a couple months ago, and I said, you know, check me out. So he gave me a bunch of tests, about 3 or 4 hours, and then he told me to go have some lunch and come back, and he gave me the results. And when I came back, he said, well, I've examined your test and everything, and you're crazy. And I said, what? I said, I want a second opinion. He says, okay, you're ugly too.
Yeah, that was a, who was the guy that wasn't Churchill that said that, was it?
I don't know.
Oh, he
I heard it somewhere.
No, it was not a Churchill. Somebody in the audience helped me out. It's, she said, sir, no, I'm thinking of the sir, you're drunk one. Tomorrow I'll wake up sober, but you're going to wake up. Anyway, we don't need to go there. But I know I'm thinking of one that's very popular, and it runs similar to that. It gets to the same point anyway.
Right.
So, well, the Fed yesterday.
Yes.
Mistake of the century. On target, on point. What do you think? That investment grade gold got a bump. By the way, folks, go to CFRNgold.com. A word from our sponsor, CFRNgold.com. Just go there, and I won't give you a word. Okay. So tell us, what some of us were watching it kind of semi-live, but I was watching it live. What were your thoughts?
Well, I definitely agree with John as far as gold going up. I think it's going to be a huge year for gold, and particularly for investment grade gold. That's where the real profits are, because basically, you know, gold is great, but its main function is to protect you from inflation. You know, as the dollar loses value. And I want to talk about that a little bit today, about, you know, how inflation works. But as the dollar goes down, bullion goes up. So you're making money on it, but you're basically just replacing what you're losing in the purchasing power of the dollar. The investment grade gold, on average, returns about 7 to 8 times as much as gold bullion itself. So when you see the spot price of gold, and you see it going up 2%, you can figure on investment grade gold going up many times that. So I think, you know, I don't think this is the end as far as the drop in stock market. And I personally don't think it's just because of the Fed. I think there's a lot of factors going into it. All they're talking about on television is, you know, the Fed bumping rates and so on, but nobody's talking about the national debt.
Well,
everybody
you don't talk about that kind of thing in polite company, you know.
That's true. You don't talk about politics and debt, but a lot of people expected, because, you know, Trump's a conservative, that he would start whittling away at the national debt. Well, as much as it went up under Obama, it actually doubled during 8 years of Obama. It's never happened in the history of the United States or the world. It's just unbelievable. It went from 10 trillion to 20 trillion. It has still increased under President Trump for 2 reasons, I think. First of all, Trump is not really a conservative. You know, he's more of a populist. He's conservative in some areas and not so conservative in other areas. And fiscally, I don't think he's a really real true fiscal conservative. Otherwise, he wouldn't have signed that $1.3 trillion bill.
when you're a billionaire, you don't have to be fiscally conservative.
That's true.
You can't spend it all. You literally make it faster than you can spend it.
Yeah.
Tell that to some ex-NBA players or NFL players. Yeah.
Exactly. Yeah. He probably doesn't even look at the prices on the menu, you know.
He just goes for the full rack. He doesn't even look at the prices. No half rack for him. No, he wants the full Monty. Yeah. He just says, just bring me a rack. Okay.
Yeah. But the other reason I think that he hasn't really done anything on lowering the national debt is he didn't run on that. He ran a lot of different things, made a lot of promises, but you notice that he didn't talk about reducing the national debt
as part of it.
Yeah. So it is going to continue to weigh on the stock market, I believe. I have a little different opinion, I guess, than a lot of people about why markets move.
Tell us. We'd love to hear.
Well, I think it's just pretty much emotion.
Fear and greed.
I'm sorry?
Fear and greed.
Well, yeah.
Two very popular emotions.
I describe it, you know, I think people that make a lot of money in the markets is because they understand mob psychology.
Oh,
okay.
Oh, so beautifully said, and that's something that. Go ahead. Let him hear from you this time.
Well, here it is, in my opinion. It's kind of like if you go to the store and you really want to buy something like a new entertainment center or whatever, and you know your wife's going to yell at you when you get home, the salesman give you all the reasons why you should do it, and you're looking for reasons not to. Okay, you're looking for a reason to justify to yourself walking away. Well, that's kind of the way the stock market works, as far as I'm concerned. This is why when markets start to drop off, they tend to go down twice as fast as they went up. It's because as it gets higher and higher and higher, as it got up to 26,000, people started looking for excuses to bail out. Okay, they knew it couldn't keep going forever, so any excuse would work. So interest rates going up, okay, let's sell. The national debt reached a new level, let's sell. Some company didn't come in with very good earnings, let's sell. So that's you know, I don't believe that the people who do, the mass of people who do most of the investing really look that much at fundamentals. They're looking more at protecting themselves, and as soon as it starts to get the least bit scary, then they bail. I may be totally crazy, but after 40 years, that's my opinion.
Most people set out to buy low and sell high, and they end up doing what? Buying high and selling
high and selling low. Yeah. Jinx, you owe me a Coke.
Okay.
Well, you know, when somebody
have Coke anymore, but thanks for the thought.
Well, you know, when somebody says something the same exact thing as you at the same time, when I was a kid, that's, you say, Jinx, you owe me a Coke.
My wife grew up with that. I didn't grow up with that, so the first time I heard her say it, I'm like, huh? This is 30 years ago, but I'm like, what are you talking? You owe me a Coke? I mean, are we talking cocaine? I mean, what's up? And she's like, no. She says, you know, and I'm like, no, I don't know. I mean, I grew up with some stuff like she doesn't know about, like pig ears and crackling and red-eye gravy. I mean, I got my things that she doesn't. She's like, what? You know, they just had beans and tortillas out here in Arizona, but anyway, we get real food back home. And I think that's why I think the food we eat down south or ate down south, people don't live as long. Maybe now it's a different story in Florida because all those people grew up in New York and New Jersey. They just moved to Florida once they became men of a certain age. Which, by the way, I think we should launch a new. I can't decide if it should be a podcast network or a podcast show. I'll give you the idea that you can decide if you want to build it out into a show or into an entire network, because I can see it going both ways. And we simply call it Men of a Certain Age. And it'll just be a bunch of smug older gentlemen like myself and you, except we won't limit it to just trading or investment grade gold. I mean, we can go wide with this. We could go fly fishing, you know, not something I'm given to, but I know some men are. Like people that watch Last Man Standing or Tim the Toolman Taylor, same guy, they would tune into that show about fly fishing. Produced by men of a certain age. Wow.
There is something like that.
No. See, they take all the good ideas, Tom. How do they do that?
Well, no. It's not exactly the same, but it just reminds me of the Romeos. Somebody started someplace, and it's spread all over the country now. There's Romeo groups all over the country. And what's
a Romeo group?
A Romeo is retired old men eating out. R-O-M-E-O.
I never heard this. Oh, you're fascinating.
Yeah, they get together for lunch and, you know, talk about football or whatever. Hey, why don't we ask the audience, let them decide, would they like to hear us continue to banter, or would they like to hear some ways that they could save on their 2018 taxes? And just see what pops up on your screen there.
We have a clear winner. They want to save money on their taxes.
They do.
Mm-hmm. And then continue with the playful banter. Okay.
Okay, got it. All right. Well, we could do that, but I was just looking at the clock here, and we've got time to finish up what we talked about last time. If you want to make me presenter, I can show some cool stuff.
Okay. Indeed. I'll send you the charts. But first, let me mention that from 2009 to 2011, there was a television program by, guess what? It's a group of college buddies in the throes of middle age trying to keep their friendship going long after they've graduated. What do you think?
Oh, yeah, I think I know the movie you're talking about.
Actually, it was a TV series. Made it 2 seasons.
Oh.
Rotten Tomatoes gave it an 8.0.
That I don't know.
Men of a Certain Age.
Oh, it's actually called that. Okay.
I unmasked myself. That's where that seed got planted years ago. Ray Romano, Scott Bakula, Andre Brower. Ray Romano. That's Everybody Loves Raymond. Scott Bakula. Oh, I bet you. My goodness. Are you given to watching NCIS New Orleans?
Sometimes, yeah. My wife really likes that one.
Okay. Well, that's what Dwayne used to look like. That's him, right?
Yeah.
Isn't that Dwayne?
Dwayne,
yeah. What's his name? My daughter. She of all the TV shows that she could choose from. I mean, there's like, I don't know, a lot on the TV these days. That's her favorite show. I asked her, is it the NCIS part that you really like, or is it the New Orleans part? I'm trying to figure out where she lived her past life, but I'm just asking these questions. She's like, I don't know. I just like it. Isn't that can I just like something? Well, when you're 11, I guess so. All right, go ahead. Just like it.
Yeah, his last name is Pride.
Pride. There we go. Dwayne Pride. Thank you.
Yeah, yeah.
All right, so I was going to send you the charts, and I never did. Huh? Or did I?
I don't know.
Okay, here you go. Now you should be able to accept and take it away.
All right. I'm going down there and clicking.
Who are they kidding?
Okay, can you see that?
I see it. Looks beautiful.
Now,
mitigating investment profit tax.
Yeah, it's a big word.
Now we see your magic. Oh, okay.
I see it's a big word, but I looked it up in the dictionary, and it means ameliorating or lowering the effect of. Okay, that's what mitigation is. So,
right, like a mitigating circumstance.
There you go. Okay, I was fumbling for the words, but nobody likes to pay taxes, and especially when you work hard to make investments, and then the government takes away a third of your money. It's just no fun at all. So I've got some ideas for people. And now this is all couched as taxes, because I did this as a webinar, and I know that most of the people on this call are people that are not investing in stocks, but they're investing in futures.
Mm-hmm. Right.
Yeah, but all of this applies the same way. I'll just do it the way it's on the screen for simplicity, but it's the same type of principle. If you've got investments that are profitable, and you're coming up at the end of the year, like here we are 10 days before the end of the year, you don't want to sell them, right? You want to let them keep on making profits. But if you've got losses, then it makes sense to sell some winning stocks and sell your losers and match those off. Okay? So you end up not paying taxes. Because as we'll see in a minute here, if you just sell your losers, you're not going to be able to take all of that as a deduction. Okay, so you can use tax losses to mitigate gains. People say, but you know, I didn't really want to sell that stock because I think it's going to go back up. Well, that's fine. Buy those positions back January 2nd. Now, if you think it's going to go up really quickly, very soon, you probably wouldn't want to do this. But if you believe that whatever you're selling to mitigate your profits on winning positions is going to go up, you want to buy it back, there is something you need to be aware of, and that's the wash sale rule. Do you think most people are familiar with that, or should I explain it?
I think it bears casual explanation.
Okay. Well, basically the wash sale rule is designed to make you pay more taxes. Okay. You can't take a tax loss and then profit from an up move in the security. So they make you wait 31 days to repurchase it. During that time, it could have gone up a lot. So there are some loopholes, and you could extrapolate this to whatever you own. But for instance, if you own a stock at the end of the year, you could buy a leap on the same stock, which is like a long-term option because it's actually a different security. People think if I had an IBM stock and bought an IBM leap, I'm violating the wash sale. You're not, because it's a different security.
Right. That's right.
If you own an option, you can buy the stock itself. And even though most of the people on this call are traders, I'm sure there's some that own some longer term things. So if you own a mutual fund, you could still buy a fund that has similar stocks and avoid the wash sale rule. Because believe it or not, there's more mutual funds in this country than there are listed stocks. They're everywhere. So the chances of you finding a mutual fund that has substantially the same stocks in it or the same character stocks or whatever that you had in yours are very high. So there's ways to get around it. You don't want to break the law, but these are lawful loopholes, I call them.
Yeah,
okay.
There's a difference between avoiding and evading.
That's right. That's right.
And what you're talking about is avoiding.
And avoiding is actually a good thing, according to Justice Blackstone.
Yeah, evading is something you do after the fact. I think
right.
That would be a proper way of explaining that, but I think everybody gets it. So, okay.
So if you're going to use any of these strategies, I don't think it's good to wait to the last day. When I was a broker, the last 2 weeks of the year were very busy with people doing adjustments to their portfolios. And at the same time, you got a lot of brokers that take time off and leave early for vacation. So I would try to get everything done by the 21st, which in this case is tomorrow, if you're going to take action on any of these things we're talking about. And then check back later on to make sure that the trade actually went off. If you did a limit trade, if you did a market order, obviously it goes off right away. Now, if anybody has any securities that have gone to zero, all right, that's never happened to you, has it, Wayne?
Well, actually, it turns out they can go below zero.
That's true with certain types of securities, right? But let's just say somebody bought a cheap stock. I always say there's a reason why cheap stocks are cheap. And this is an $8 stock that went down to zero. Well, you can't claim that as a loss because you didn't close out the trade.
Right.
You have to have documentation. And the reason is that that stock could rise from the dead. Mm-hmm. It could get a contract. People, I don't know where people get this idea, but they think because the stock drops like crazy that the company's out of business. The company can go along very nicely,
and also they're left with let's say it goes to zero. Well, they're still left with a public shell. And that's an asset in and of itself, because they might go out and just find some nice, healthy young startup that rather than wanting to go through a whole IPO process, they just back into the public shell. Yeah,
and that's a good way to do it. It's actually,
and it's very common, and there's a market, but there's a secondary market out there for publicly traded companies that have gone kind of just, they flatlined, and so you can go shopping, 20,000, 30,000, depends upon what kind of history you want, to buy when you take over that shell. But I'm sure you're all aware of that, and I'm sure many in the audience are. And if you're not, if it's something of interest to you, let me know, and I'll.
It's a good strategy. Yeah, I used to teach a one-day seminar on taking your company public, for people that had companies that they thought either soon or in the future they'd like to take public. And in doing that, I met a guy, he would set up shells like you're talking about, and he would capitalize them with $25,000 and then sit on them. They were like shelf corporations.
Shelf corporations, right.
And then he would sell them and make really good money on it. But anyway, it is possible, just because a stock goes to zero doesn't mean the company's out of business. They're still operating in many cases, and then all of a sudden they get a big contract. Price of stock goes up. Or they get a drug approved that nobody thought that was going to get approved. So the only way that you can take your tax loss on that is to get your broker to give you a no value letter. Now, if it's an option or a futures contract that's expired, you don't obviously have to take any action because that shows up on your statement. But
that's
securities,
right there, an expired option.
Exactly. But when it comes to stocks, you have to have documentation of either selling, even if you sold it at a penny, then you got documentation. Otherwise, you've got to get this no value letter. Now, I mentioned earlier the fact that the government's not very fair when it comes to losses. If you make 21 grand in profits this year, they want you to pay tax on the whole 21 grand. But if you lose 21 grand, and assuming there's no profitable securities to match off against it, you don't get to deduct 21 grand. You can only deduct 3,000, which
now that would only be enacted into law by a group of individuals that have, well, privileged information as to which way the market's going.
Yeah. And the problem with this law is that it hasn't been updated in like 3 or 4 decades. This $3,000 limit on losses has existed. You would think with most things, as inflation has gone up and up and up, that by now it would be a cap of maybe 30,000. I don't think
say real money. What do you think? A seasonally adjusted figure, what would that be?
Well, if you adjusted it for inflation for the time that this rule was put into place, it would be about $30,000.
Okay. Sounds fair.
But see, I don't think it should exist at all. If you're in a business and you have business losses, you can deduct them all off your income taxes, just like you have to pay profits on the So if you're a trader, that's your business, and this is discriminatory against traders. But you don't want to take 7 years to realize your loss, right? Because you might have losses in other years, and it might take you 50 years to.
You might mess around and make money one year. That throws the
right.
whole thing off track. Okay.
Yeah, but, it's crazy that you can only deduct. So that's why some of the strategies I was talking about earlier, selling winning stocks, even though you think they're going to keep going up, to match off against your losses, it really makes a lot of sense, because that way you can take all of your loss. Let's say you did have $21,000 in losses, but you had a bunch of other securities where you could sell and take a $21,000 profit. Do it, and then just buy them back after the first of the year. Okay? This whole thing doesn't sound very fair, and it isn't, but that's the way it is. You have to work within the system. Now here's some good news. Index options, including leaps, but also including futures on indices. This is one of the very few decent tax breaks we get. Now,
those who trade futures enjoy the 60/40 window as well. Well, check with your accountant, but that's the law. Go ahead.
Now, is that on all futures or just on index futures?
All futures. Soybeans.
All futures.
Crude. Yes, sir.
Okay. Well, that's good. So most everybody already understands about this little quirk in the law that you can take 60% capital gains, which normally you'd have to hold it for a year and a day to be able to do that. But even if it's a one-day trade,
if it's a 5-minute trade.
Yeah, it's like you still get 60%.
That's right.
But here's the thing. I put a big star at the bottom. Explain this to your accountant. You would think if you just hand him all your statements and say, do my taxes, that he would claim that 60/40 partial capital gains treatment. But believe it or not, an awful lot of accountants have no clue about this. So I've had to train more than one accountant in how to do taxes on my securities. Don't just assume that they know what you know. Okay?
That is great advice.
Now, for this year, your long-term capital gains can be 0, 15, or 20% if you've held assets for more than a year. But less than a year, your taxes are going to correspond to ordinary income tax brackets, and you can see them listed there. So if you're in a 10% tax range, then you get 0% capital gains. And if you're in the highest 37%, then you probably be paying 20% on capital gains. In some years throughout history, the short-term and long-term capital gains were the same, so you didn't have to worry about any of this stuff. There was no difference between them. But right now, there is a fairly significant difference. Okay, anybody invested in energy projects, oil or gas? All right, I see those hands.
Yeah, okay, all right, so we're going to delve into this. All right, go ahead.
Yeah, and this doesn't take long, but if you've invested in drilling or exploration, I underlined it there, these investments are 100% deductible against passive or active income. Passive income would be income from rents or investments. Active income is your profession or your salary. But even if you make a profit on the drilling and exploration investment, you can deduct it as 100% loss. That's fantastic. That's how these guys sell these projects. Because
so if you buy Exxon, well, they're involved with drilling and exploration.
No, it's got to be a strictly.
The guy that calls you on the phone. Right.
It's got to be somebody who's actually drilling the hole. If it's a company that has various different kinds of things like Exxon, it wouldn't work. But remember though that you can't deduct everything that you invest, because if the well is successful, then they're going to call you up and say, okay, we need your money for completion now. which means you've got to do certain work on the well. You've got to put a pump on it. You got to connect it up to the gas line, whatever it is. That's not 100% deductible. But people always ask me, well, why would the U.S. give us this great goodie? Well, it's because we import too much of our crude oil. Fortunately, that is starting to
that's
to
swung the other
decrease.
way. We're now the largest oil exporting nation, correct?
Right, but we're still, it's crazy. We're exporting, but we're still importing.
Yeah, right. Go figure that one out.
I was just going to say, go figure.
Does
But
that make sense?
it doesn't make a lot of sense, but I think probably has to do with where you are. Like if you're in the north, you're likely to import some oil from Canada. If you're in the Gulf Coast, we're drilling down there.
Yeah, I own Kroger, but when I get my paycheck, I go shopping at Piggly Wiggly. Really? Why?
Okay.
Why is that? I mean, it's kind of the same thing. For the stretch.
Yeah. Now here's a little interesting point. You can actually deduct for projects that can be drilled in the next year. As long as you make the investment by December 31st, you can do that. But drilling has to commence by March 15th of the following year. Well, you don't know for sure. I mean, the guy wants your money. He wants you to invest right now. And so he might say, yeah, we're going to start drilling March 1st.
Oh, yeah, you expect a couple follow-up calls beginning about March 1st.
Yeah. So
the window's closing. Yeah, we need extra funding. We need we got to clean the Corona in the pump, and it's bad, and we're too close to walk away now. Sorry if I've stepped on any oil and gas toes. Not my intention.
But it's best not to take that deduction. Just hold off on doing your taxes until you find out if it actually does start to drill. Because let's say if you filed your taxes in January or February and they told you it's going to be drilled on March 15th and you've taken the deduction and then they don't, now you got to refile your taxes. So wait to see if it actually happens, then claim it.
Oh, okay. So yeah, you can't be an early filer if you're caught up in this.
If that's the case, if you've invested earlier in the year and the drilling has already started by the end of the year, you don't have a problem. Now, oil and gas is not unlimited, right?
Well, that's true. God created the heavens and the earth. He created what I understand is a finite amount and sewed it up in the belly of the earth and said, I'm done.
Right. So they know that it's being depleted, and the government does allow you to take a depletion allowance. So that gives you tax-sheltered income every month, and a lot of people, when they get older, like to have monthly income.
Sure. But
talk to your accountant to see exactly how that works for you. Now, what about investing in God's work? I like that. Wouldn't it be cool if you could take IRA money? Let's say you didn't need it all. Your kids are grown up; they're doing fine. You got plenty of money in your IRA. You've got enough income to last you until you go to heaven. Wouldn't it be nice to be able to take money out of your IRA, give it to charity, to the work of the Lord, and take a tax deduction on it? Well, up until the end of 2011, you could do that. You could take money directly from your IRA, give it to a qualified charity, and not have to pay taxes on the distribution. Now it's changed a little bit. You could still use IRA money to make contributions, and you can deduct them, but you're going to have to pay taxes on the withdrawal. So you won't get as big a deduction as you would have before, unless it's from a Roth. If it's a Roth IRA, you've already paid all your taxes on the money before you put it in. So you can directly contribute to a charity without taking money out and doing a distribution. You can pay it directly out of your IRA, which is kind of cool. Okay.
It is. That is more good news.
Yeah, and another thing to do, we talked last time about the fact that if you think that you're going to be in a higher tax bracket next year, you could go ahead and make charitable contributions early, something you're planning on doing in January, February. That's another way. You can gift it this year before the end of the year and deduct it from 2018 taxes. Okay, now here's another cool one. If you've got stocks, bonds, mutual funds, I've mentioned here, but other securities that you've owned for over a year and they've appreciated, you can donate them and deduct the full appreciated amount. Now, it used to be 30%. Now they've changed it. It ranges between 20 to 50%, the maximum that you can do this with of your adjusted gross income. But if you've got securities and you want to give to a charity, let's say you just paid $100 for the security and it's doubled, okay? The normal way of doing things is you would sell it, you would pay the tax on the 100% profit that you made, and then you're donating a smaller amount. But if you do this, you can donate them directly, donate the securities to the charity and deduct the full amount as long as it doesn't go over the 20 to 50%. And you end up paying no capital gains tax on those gains. So it's really a neat thing to do. So the more the securities are going up, the more tax savings you get and the more money that the church gets. The only problem with this is not all charities have brokerage accounts and to accept them. So if it's a small amount, it's not going to be worth their while. But
your big box charities, they'll be more than happy to accommodate.
Oh yeah, like
United Way,
Moody Radio or something like that. They've got whole departments for this. But if it's a small church, they might have to open up a brokerage account in order to receive the securities. You just transfer it to their account. But just don't sell them and give the money, because then you are going to pay taxes on it. Okay. Now, I always like to do this, particularly if I'm doing this in a in-person setting. I teach these Christian financial concept seminars at churches quite a bit. And I always ask, do you have any tax saving strategies, ideas, tips? So I'm kind of throwing that out there and see if anybody has one that I haven't thought of.
Okay. All right, audience. It's time for you to respond if you have a tax saving tip. One that we haven't covered, one that we haven't discussed. Talk to me. I'm trying to find the chat box. Here it is. All right, let's see if anybody types it in. I got nothing so far. Can you see the chat box? You can see it, right?
I can't see it, but I'll go ahead, and if anybody does come up with one,
if
interrupt
they type
me.
something in, I'll let you know.
I'm almost finished here. One of the reasons why I'm so concerned about taxes and doing a whole webinar on it is because I think they're going to keep going up. And the reason they're going to go up is because we're on a very dangerous fiscal cliff. Now, the guy standing there looking frightened about the fiscal cliff is not the president in this case. He represents, that's Uncle Sam, he represents us, he represents the country. And the big ram coming to knock him over the cliff is the Congress. Congress doesn't know how to save money. You know, if you hear that Congress said, well, we trimmed 10% off the budget, they didn't. They lie, but they put it out there. They say we took 10% off the budget. If the budget was, let's say, $1 million for whatever department it was, their idea of taking 10% off was if they were going to increase that budget by 15% to $1,150,000 or whatever. Their idea is they take 10% of the increase, proposed increase, and that's like
Blondie. Blondie comes home from shopping and she says, "Hey, Dagwood, I saved you $100 today."
Right.
Same thing.
Because she didn't.
She bought a dress for
buy
half price. Yeah. Or
right.
price.
Exactly.
It can go a couple different ways, but you get it.
So, yeah, exactly. And that's what drives me crazy about our legislators lying to us. They would never take that $1 million and actually lower it to $900,000. They're just going to lower some of the proposed increase. So we're at a very dangerous time in our country's existence. Even though the economy is doing well, we have a very scary thing going on right now, which is that the Federal Reserve System is now the single biggest purchaser of long-term U.S. debt in the world. That's bad, because it's like, Dwayne, be like you taking $100 out of your left pocket and put it in your right pocket and saying you loaned yourself $100.
Now pay me the interest.
Yeah, it's smoke and mirrors. They're supposedly buying the debt because the other countries that used to buy it have backed off, and they don't want our debt anymore because they know how much trouble we're in. No country in the world has ever had as much debt as we have. And I'm not talking about just overall debt. We're the biggest economy in the world, so naturally we're going to have the biggest debt. But we're also talking per capita. Okay, so the government keeps printing money, and that takes pressure off of them because, believe it or not,
except they don't really print it anymore. Just it's a nice, nice printing press there, but yeah, they just got to move a comma.
Yeah, the vast majority of the money produced, you're right, is produced all on computers. Very, very little. Matter of fact, we're going to see, I'm predicting in the next 5 to 10 years, we're going to see currency disappear.
Sure.
We'll see if I'm right.
No, I think you are. Although, what about those in society? Well, you know what? There'll be a way. There'll just be a way, whether it's a prepaid card or, you know, whatever.
Yeah, I think what's going to happen is it's actually
there's
predicted.
A guy standing outside Circle K, you know, and said, "Brother, can you spare a dime, or can I get a cup of coffee? Would you buy me a beer?" He's going to say, "Could you put $5 on my card?"
Yeah.
So I can call my daughter in Tucson or whatever. Yeah.
Or mate your telephones together and they'll transfer, but it's all going to be digital because they want to get rid of the underground economy totally. So you're going to see paper money disappear. Checks will also. When's the last time you tried to use a check in a store and they looked at you like you're from Mars?
You know, I was in line not too long ago, and I was just I'd already read the Inquirer, so I was just reading the sign, and they actually accepted checks.
Wow.
And I was like, it was like a foreign thing. Now I have a checkbook in my drawer. And every now and then, I'll run across some online retailer or somebody that wants to take a check instead of a card. I'm always a little suspicious of that. Oh, which brings up a good point. My wife got this thing yesterday. Dear Dwayne's wife. We declined an application for a new. This is from Chase. Yeah, that Chase. We declined an application for a new account because we couldn't confirm the information on it. We're concerned someone may be using your personal information fraudulently. And then they go into, these are steps you can take to protect your identity if you think your personal information has been compromised. Well, we know that it has because she has not applied for anything. You know, she's done absolutely nothing that would require any kind of a credit check of any kind. So,
wow.
I guess she's going to have to call one of the credit unions and TransUnion, Equifax, or Experian, and put one of those 90-day freezes on the account. Because in order, yeah, everybody's familiar with that. You're familiar with that, of course.
Yeah, one of the three major reporting agencies. Yeah, that's something to take care of. I think it really makes sense to have one of those LifeLock or whatever they are.
Right.
There's several different companies that do that.
We have that. I should call them and get them on the case. I've been paying them for years, and we've never used their service. We got the legal and the credit. We got the package. In fact, I'm an authorized
Oh.
reseller. I can't even think of the name of it.
Prepaid legal. Or that's what
it's got a different
used to
name.
be
That's what it
called.
used to be. And
Yeah.
you, the other day, you
Yeah.
know, somebody. I was in a mentoring session with somebody, and they said, "Oh yeah, I used to sell that."
It's called Legal Shield now.
Legal Shield. That's it. Yeah, they got a cool
But the
app.
company-
You know, if you
company
get pulled
started
over late
as
at night
Prepaid
drinking,
Legal.
you just hit one button because you're a little bit wobbly. You just hit one button and bing, they turn you on the phone. Did you know that? Yeah, it's in the app.
I didn't know about that.
Yeah. Yeah.
But see, I don't need to worry about that because I don't drink.
Well, good for you.
But
Can't remember the
okay,
last time. Yeah.
let me wrap this up because it's always nice to scare people right at the end.
Yeah.
Every day last month, the U.S. took in $5 million in taxes every minute, or $7 billion in taxes per day. All right.
Oh,
But
so I mean, every minute, 7 billion per day. Gotcha.
right. But at the same time, we spent 8 million per minute, or 12 billion per day. So we spent 5 billion more every day than we took in.
I'm not very good at math, but I think that's wrong. Scary. Yeah, scary. Oh, it is scary.
And about $1 billion of that was just for interest. Okay, so we have.
Oh, you mean to the people that bought our long-term debt?
Yeah.
Oh,
exactly.
And who was that again?
Exactly. It was mostly the Federal Reserve.
They're going to call us a conspiracy
which we're
theory
paying
show
for.
now.
Yeah, and of course, other countries have some of our long-term debt as well. So you got one party that says we have a big tax problem, and I don't believe that we have a tax problem. We have a spending problem, a massive spending problem. If we stop spending so much, then you'd be able to lower taxes. You know, we shouldn't be paying more than 10% of our gross income. No one in this country should. To be able to take care of the legitimate, constitutional, lawful needs of government. But yet, some people pay as much as 50% of their income. The people in the top income brackets are, you know, when you add up their income tax, sales tax, excise tax, property taxes, and so on, 50%. Well, every nation in history that's taxed their people 50% or more of their income has crashed and burned. That's why Rome fell. Okay, so here's a solution. You know, it's looking to me more and more like the bear is going to win this battle. He's toppling those pillars that are holding up the bull, and I think that we're going to see the stock market keep going down, and as we do, we're going to see gold keep going up. So if you're concerned at all about protecting assets, this is something you should do. Now, I know traders tend to put everything they've got into their trading, but it's always a good idea to take some of your profits off the table and put it in something that's a long-term safe hold. So if you want to know more about how to protect assets using precious metals, you can go to the CFRNgold.com and fill out the form there, and we'll send you information, and in that packet will be my phone number. And if you need to do a private Q&A session on your situation, then I'd be happy to answer your questions.
There you go.
So that's what I have for today.
Well, that was awesome. We had a good time. We had playful banter. Then we had informative, intellectually stimulating, and potentially tax-saving information to share with our listeners. So, Dr. Tom, we thank you for that so very much, and we'll talk to you next time.
Great. You know,
yes.
God bless everybody.
Yep.
Merry Christmas.
What are you going to say? Merry Christmas? You can say that
Merry
on this radio
Christmas.
station. Merry
Ho, ho,
Christmas.
ho.
Oh, and into the night. Dr. Tom.
God bless. Bye-bye.
All right, bye-bye now. All right, let me grab the charts back, as I do. See how that works. Well, that didn't work. Okay, so we'll try something else. Let's see if we can make it do this. It turns out we can. And there it is. Ta-da. Okay. So this, okay, you won't see this every day on an hourly chart, but you might see it every day on a 1 minute chart. And I'm just talking about these little simple trend lines here. Just bull leg and a bear market, and it gets broken, and it gets broken. And now the one I drew just a little bit earlier, that's getting taken out as well. Okay, so going back to here, where are we? We're entering the rectangle. Okay, is that a big deal? I don't know, is it? Where's the 50% Fibonacci retracement? Not a 55, but a 50. Yeah, that's from here to here. That's halfway back home. And see, halfway back home, wow, what a great place to launch a rally. And if we launched a rally from here, well, that would give us what they call a measured move. A measured move, you say? Yes. Fibonacci in his crazy little thing called math, done with rabbits. I'm serious. Go read the story. Get that right, get this right. Okay. So if we springboard out of here, 100% extension of this leg propels the market up to 3,600. Who's he kidding? Who's that Fibonacci guy? Who's he kidding? Well, that's just the math. That's all. Now, what happens, you say, if in fact the market isn't satisfied with the rectangle, but really wants to do the 50% retracement? Watch what happens to the number if it goes to the 50. Okay. What did we just do? We just moved all those down, right? Okay. From the low. Oh, we got to move the high. We got to move that too. Oh. All right. From the low. Let's start over. What do you say? First we'll go just the fibs. Mr. Phibbs. Was that a movie? Was that a popular movie? No, I don't think so. Okay. Well, that's pretty close. All right. Now we're going to take the extension tool. Now you could sit down and grind this out with pen and paper. You don't have to have this fancy tool, but this fancy tool is included with most charting packages. So you're in luck. Let's get that one out of the way. We know where it's at if we need it. Okay, so we wanted to go down to, oh, let's say we were just above that. I guess we'll, for the sake of effect. Okay, so you see that's where a 50% extension would take us. Oh, you mean from the 50 back up to the high? Yeah, that would be 50, right? Because from the low to the high, this is a 50% retracement. Right. It's perfect. So, where does that put us? 3,500? Okay. And how long would that take? Well, it'll take as long as it takes if that's the direction we head in. And by the way, the indices always go higher. Yes, I know that they have pullbacks. Sometimes scary pullbacks all the way to 666. When the S&P was trading 1,500 and the recession hit, the real estate recession, we went to 666 and bounced. Pretty scary. That would be like going from almost 3,000 where we were to 1,500. Could that happen in this day and time, in this world in which we live? Yeah, it could. But it doesn't change the fact that the indices, be it the S&P 500, which is a best of breed index, 500 companies that qualify not just because of market cap, but for a whole host of reasons. And when one gets weak, they get kicked to the curb and a strong bull gets brought in. So it's always getting stronger, always moving higher. Dow 30, same story, just 30 stocks instead of 500. In Q100, there again, best of breed index. Russell 2000, small cap stocks, but 2,000 of the finest small cap stocks as determined by Russell and their index. So when you're dealing with an index, yes, you may have to weather, after 2 years of climbing, you might have to weather a 50% retracement. But based upon your timeline, your window, this market will see 3,000. I'm not a forecaster, I'm not a prophet, and I don't need to be to say that with calm confidence. Okay, at some point here in this pullback, the risk of not being in will become greater than the risk of being in. And guess what? It's the musical chairs, the music stops, everybody rushes for a seat. Now, trying to catch the falling knife, we all know that's a mistake. We've all been told, don't try to catch a falling knife. You'll get hurt. And I don't suggest it. Now, what we do intraday, it's a little different story. Although, if this is what we have, which, by the way, this is just what we have. I mean, I suspect that. Well, I'm gonna leave it on an hour for a minute. Let me show you. I pointed it out earlier, but I'll show it to you again. Okay, this is our this is a 1 hour chart. Okay, I circled this on another chart, I think. See, what do? We had a leg and a retracement right up to that CFMA1, which we always know as we approach it could be good resistance. It was. Okay, then we started to walk, sideways to up. Yeah, that always happens, right? With these extended moves. And on the hourly chart, we go right up to the BBC, just like you've seen on my chart a million times with the 30-minute chart, which you'll see a lot more often on a 5-minute chart. You'll see over and over and over all day long on a 4-tick range chart, on the range chart that we use in the live training room. Okay, so we get leg and a retracement and a leg and a retracement. See, that's a deeper retracement than this one. And then bang. So if we drop it to a 30-minute, you have a little bit of a different story. See this head fake here, right? Always watch out for those. See, that's why you always hear us say, okay, we want to see it get above the BBC and then hold on a pullback, right? What did this not do? This did not hold on a pullback. Price got above the BBC, which is where we anticipate higher prices after it holds the pullback. Now, that doesn't matter if it's a 30-minute, a 1 hour, a 1 minute. The philosophy is the same. Had it happened on the hourly, had we gotten the bullish cross, see, there's no bullish cross here. But had we gotten one, we'd still want to see the same thing. We got to see it hold on a pullback, or we're just really not interested. And here we go into 30-minute. Look where we are. 24.50. What's the swing low? 24.48. I think, let me look. Okay. I believe I mentioned something about, yes. Here we go. Potential support. support 2440, 40 plus points below. Now these are some previous weekly trading zones below this week, 2501/2502. That's the lowest weekly zone for this week. March 26th, there was 2456.57. And somebody can check that. Something about that, I'm not 100% sure. Somebody researched this for me and provided it in the Telegram. So anyway, after that, no, where'd it go? Right here. Back February 11th, 2376. Okay, so I mean that's getting pretty drastic. That's that's way down here. But what's in the neighborhood? You know, what's close by? Potential support 2440. That's pretty close. 2440. Looks like we're heading for it, doesn't it? Now with that 2440, let's go back over here. Put it all together. Where's 2440? 22, 22. Well, there you go. It's an area. Look at this. Look at this fall. Now, this is a week, yes, but that's after this week and this week. Should you prepare for a bounce? Yes. Can you be relatively confident that we're going to get a nice bounce out of here? Yes. So nice that people will get carried away with it. What do I mean? Well, once it starts to bounce, then everybody thinks it's a ticket to the moon. But it's not. Because as it fell, the market put obstacles in its path, landmines if you will, that it now has to overcome. Not black magic, not witchcraft. It's just how markets work. All you got to do is just spend a little time with them or with us, and we'll try to help you see it. This is like I'm trying to help you see it right now. So, okay, price comes down, whether it gets to the bottom of the rectangle or goes all the way to the 50, matters not. Well, it does matter in that the resistance it finds is at a lower and lower price, right? And that resistance, that is resistance until proven otherwise. Resistance until proven otherwise. So as much as we anticipate a bounce here, as price pulls back up and hits this trend line, at whatever point that happens, okay, we're going to look left and we're going to see the area. We're going to get a bounce in the other direction. They'll battle it out, duke it out, and eventually, at some point, price will close above this trend line and hold on a pullback. And that's how markets work. Bullish cross, a leg and a retracement. This is a weekly chart. A leg, going back to February of 2016, leg and a retracement, then a leg and a retracement, and then a leg and a retracement. But you'll notice, see, after this bullish cross right here, we know that the next thing we have to be looking for, we know we're going to get pullbacks and legs and pullbacks and legs, and price is going to revert to the mean over and over and over. And eventually, we're going to get a bearish cross. Okay. Now, on the weekly, we got one right there. But what happened? Price never pulled away, and over a period of about a month, price reasserted itself. Without you see how each one of these candles is touching the BBC? There was no pull away. Now look what happened when we crossed in the other direction. When we resumed the trend, we immediately pulled away, pulled back, up close. By the open of the next candle, plus a tick. And that next candle opened at 27.62. 27.62 and went to 29.40. Then we get this bearish cross, okay? Bearish cross here, no pull away. Bullish cross, pull away, pull back, bang. All right, we drop, get a bearish cross, pull back, down close. Here we go. Same thing in reverse, okay? However, price is approaching the 50% Fibonacci retracement. And whether it ultimately holds or not, if we get there, it's going to be a heck of a bounce. More than this trend line? Hey, I'm not a prophet. But we know the areas where we get overlap with these different forms of math. And that's what we'll be looking to. And we'll walk you right through that thing. Let's see, we're way over time, which means it's time for our good word for the day. By the way, speaking of time, it's Thursday, which is workshop time, both for passport holders and CFRN partners. So if you want to be a part of that madness tonight, 9 p.m. Eastern, you got to be a partner or passport holder. And if you need help with that, call 949-42-EMINI. And for people who refuse to spell stuff out on their phone like me, that would be 949-423-6464. Okay? All right. Now, consider, let's see, what was the last ES? I thought we had, yeah, if not short the ES, consider selling 2472, which seems like such a long time ago, but it's not. It was just right here. 2472 took us down to a low of 2463, and that alert was to go to 2467, and it went to 2463. Similar success with the NQ, with Crude, with the Russell, with the Dow, and going back to last night, the ES, when it made that first little run down, 2483 to 2480. It's all in the charts, as they say, except the good word for the day. That's not in the chart. But as we slide away into the close almost, well, still got some time. All right, the great designer. Do you believe in grand design or a grand designer? I do. Psalm 19:1. The heavens are telling the glory of God. They are a marvelous display of his craftsmanship. Psalm 19:1. The heavens are telling the glory of God. When you look up to the heavens, you see all the stars, you go, man, that's incredible. But did you realize that you're seeing like a thumbnail sketch of what's really out there? I mean, we know about our galaxy, the Milky Way, but did you know that there's millions of galaxies? Well, I knew there was a lot, and I knew there was stuff we couldn't see. But there's a podcast called The End of the World. All 10 episodes are in the can, and it's from one of the guys who does a lot of podcasts. Stuff you should know, I believe. Anyway, just go to wherever you get your podcast. It's called The End of the World. Just punch that in, search it, you'll find it. You can binge. All 10 episodes are available. I've only listened to the first one, and I don't think I'll listen to the other 9. But what they talked about, you know, They broke it down into just some basic mathematics. Okay, if the universe has been around for this many years, which I know. Hello, John.
Yeah, hi. Sorry, just look, I think we've got a reversal starting to develop here.
In the S&P?
Yeah. It's obviously down a lot, but we've come back from these levels a few times before, and if we were to rally into the close, it would be cut back a few 100 points here could be a big deal. We've had a lot of disappointments today. We've had a few efforts to turn, but one of the things that's a little bit of a problem is the breadth today is not quite potentially at a double bottom here, or maybe not quite new lows, but it's very extreme. It's sort of like a 2008 levels. So it's you could argue we're making a double bottom in breadth versus much lower prices in the market. So we've got a little bit of positive divergence developing in here, and if the breadth improves, up in the next hour or so, that could be quite significant. But we're not there yet. And
I'm going to guess 24. I'm going to guess 24.40, and that's just nothing more. Nothing more than that, I guess. So.
Yeah. And something when we had the first sell-off, we had about the same breadth level, but we're thousands of points lower today, versus the breadth, and we've gone down on this is the worst day in breadth-wise we've had since this first barrage that happened back in October. So it is a sign of it's a sign of hope. But look, we just hit our target at 2450. I mean, I can almost not believe it. And the Dow 22.6 22.639, it looks like the low. And we're 22.775 right now. So
I got the low. Are you talking about on the Dow or the S&P?
Yeah. Dow futures 22.639. Yeah.
On the Dow.
Yeah. No, we're really starting to go now.
22.687.
Yeah.
Now I put up some numbers last night that were they talked about the potential for capitulation, and if it's going to happen, could it happen, would it happen? Capitulation, not a prediction. It's in the NQ to 6080, the ES to 2415, the YM to 22,000, and the Russell 2000 to 1255-ish. And so the Dow currently sits at 22,696. So we're talking potentially another 700-point drop from here in the Dow, which equates to a 70-point drop in the S&P. And a 70-point drop in the S&P would take us down to about 2380-ish.
Yeah, it could overshoot. It could overshoot. But look, if we get, I mean, stranger things have happened. But if we get back positive, we're just about to go to minus 99 on this. On the Nasdaq, from being down about 150 or so. So that's quite an improvement.
Yeah.
And we've got we could have a tremendous snapback from here. It would be if we were to snap back. And remember, a lot of times this market doesn't. The previous bottom, we've had two previous bottoms now that came out of nowhere on a very bad sell-off day, kind of like today. I want to show you something. Wonder if we can get this up. This would be fantastic. Just a second.
Are you sitting
yeah, well, actually, I've got a Twitter thing out there. I've got to find. I'll send you the Twitter link, because this is really a dynamite thing. It's an idea about Trump fires the Fed guy, and puts this.
Can he fire the Fed guy?
Yeah, I think he can. excuse me.
Or
And,
does it take, as they say, an act of Congress?
no, I think he's got the power
He's
to
got the power?
iron fire.
Okay.
Yeah.
You know, the
but-
guy was like a deer in the headlights yesterday at that press conference. I think he realized what he'd put his foot in when he got out there behind the little podium, and the more he talked, the worse it got. I mean, it's like he was trying to be so careful. You know, he was trying to use such dovish language, but he had just taken such a hawkish stance that, oh, economy's fine. Well, everybody knows, well, no, it's pretty doggone good, but I wouldn't go so far as to say fine. Would you say fine at this point with all that's happening?
No, I definitely think we're in trouble. But
Dow,
check
the
this
S&P
out.
500, and NASDAQ all negative on the year.
Okay, I'm going to send this video to you, and it'd be quite nice if you play it because it's
Yeah,
really, really out of the box. It's out of the box type of thinking here,
Oh,
and it's
is there
pretty
audio
interesting.
involved? Because if there's audio,
Yeah.
folks won't be able to hear it, which is a shame. Hang on, let me think. Let me think here. I'm a pretty good thinker. I'll figure something out. Let me just get to the email.
Yeah, this could catapult the U.S. economy to 7% growth. This idea, and it would also monetize the debt. So it's something like this were to happen, you know, it'd be a total and utter game changer for the U.S. And would begin to fix a lot of the economic ills that still dog us. So I'm shooting it over to you right now. You know, one of the things about making a bottom is you've got to go down and make, when it's the real bottom, you have to kind of go to an extreme that basically reverses. And we're sort of potentially at that point here today. You know, we've made a kind of a three-wave move down, and this is arguably where we should turn if we're going to turn, you know.
All right, I'm waiting for this to come in.
It hasn't come in yet? No?
Yeah, let me look again.
Yeah, Dwayne, the VIXs are coming off as well, too, a little bit off the ties. It's usually a sign that the turn is at hand. And, you know, these VIXs, we got tremendous divergence on these VIXs that nobody's talking about. You know, why, you know, given where the market is, the VIXs should be double where they are today. I mean, I'm not kidding. They should be double. Why are the VIXs nowhere near where they were when we made the lows earlier in the year? That's the most powerful positive divergence out there right now. And I tell you, if this market, if I'm right and this thing is about to turn, it could be a rally to end all rallies. I mean, you might see, you know, a 10% rally here, just before, you know, it's something really, really incredible.
All right, here we go.
One of my outrageous predictions for 2019 is that U.S. President Donald Trump says to Fed Chairman Jay Powell, "You're fired." After a series of corporate defaults, a credit crunch inspired by the many years now of Fed tightening and especially quantitative tightening, we see a cratering GDP, we see consumer confidence impacted by this rate hike cycle, and house prices finally turning over. Casting about for blame, Jay Powell is an easy target, and yet his answer is that it was actually the era of low interest rates that inspired a lot of bad behavior and low productivity, and he sees no need to cut interest rates further. Maybe he can tweak quantitative tightening at best. President Trump then fires Powell, saying he's not supportive enough of the country's agenda and the government's need for financing as the issuance of debt is at a record pace. More supportive is the very ambitious and very pro-growth and proactive monetary policy candidate, Neil Kashkari, the president of the Minnesota Fed. He advocates for the issuance of $5 trillion of zero-coupon perpetual bonds, effectively direct debt monetization, in order to dig the U.S. government out of its funding problems and move the economy forward, essentially nominal GDP targeting. What does this mean? It means we'll have 7% nominal GDP growth, inflation at about 6%, although it's reported at maybe 3 or 4, and then we have a Fed policy rate of 1%. Now that is financial deleveraging you can believe in, especially for the U.S. government. For more on this and our other 9 outrageous predictions for 2019, please see home.saxo.
Okay.
Pretty powerful. Huh?
Yeah.
That would create world growth on a scale you've never seen before.
Yes, it would. Yes, it would. That's a good idea, and not so.
And it would be one of those times when gold and the markets go up together, because if you're going to have for 3 or 4 or 6% inflation, you're going to have a higher gold price,
right.
No matter what. But what's not to like? I mean, all this sort of fear of higher gold prices and why they've been trying to keep it down is a lot of nonsense. I've said this before. It is a little known fact that from 1978 through I think February 91, or something of those. So over the 3 years or so, the Nasdaq went up. Actually, from February 78 through 1980, when gold went up to 800, went from 400 to 875, and supposedly all hell was breaking loose. The Nasdaq rose 40% over the same time period. So, if the Dow goes up 40% and gold goes up 400%, in some future scenario here in the next few years, it probably means there's going to, it's a precursor. Remember, this all happened between, leading up to 1982, which was the interest rate crunch, right? At 79, 82, yeah, the interest rates went to 21% in 79. And then what happened next? We had a 20-year bull market. So all this fretting about the future and fear of gold being high is all a lot of nonsense. It really is.
Yeah, I agree. Well, John, we're way over time, so I'm going to have to wrap it up here.
Yeah.
Yeah,
all right,
good
thanks
afternoon.
very much.
You betcha. We'll talk to you soon.
Bye. Bye.
All right. All right, guys, back to the great designer, okay? And don't forget to check out that podcast. Now, when you look through the universe, look at the universe through a telescope or a microscope, you discover that God is, in fact, the great designer. Now, here's a look at 3 of the things he designed. Number 1. Yeah, and you're going to hear this. They're going to talk about this very subject when you go to episode 1 of the End of the World podcast series. You may want to listen to all 10 episodes. One episode kind of pointed me in the direction they were headed, but I'm glad I listened to episode 1. It really gave me a crystal clear idea of the enormity of the universe, which is mind-boggling, so it's really not that clear, but it does boggle the mind. These are just 3 of the things, and these and more are talked about in the podcast. And the point of it is are we alone? I mean, if it's that big and it's been around that long, now we can prove, I think it's that big. The how long part, is that a carbon smudge on your forehead, or is it Ash Wednesday? I don't know. Temperature, the sun's surface is 5,500 degrees Celsius. We are 150 million kilometers away from it, which just happens to be the right distance. If the Earth's temperature was 30 degrees hotter or colder, all life would cease. Think about it. Why wasn't the Earth placed twice as far away or twice as close? Out of the millions of galaxies out there, did we just We just dumb luck. Huh. Rotation. This is number 2. We rotate 365 times a year as we pass around the sun. Suppose we only rotated 36 times. Well, our days and our nights would be 10 times as long. We'd be terribly hot on one side and unbearably cold on the other, and life as we know it would cease. So that's just 2 things. How about air? Number 3. Oxygen constitutes 21% of our atmosphere. Now, that just so happens to be the precise balance of air we need to breathe. Why not 50%? Because the first time somebody lit a match, we'd all be toast. So ask yourself, is the 21% by accident or design? And if there's a design, then it follows that there must be a designer, right? You can't get a design without a designer, and there is. And if you'd like to know him, you can. At creation, he revealed his great power, but at the cross, he revealed his great love. Through Jesus, his son, you can know the great designer personally and receive the gift of eternal life. If you don't, you'll enter a lost eternity. Any chance that you might be the exception? No. The people in heaven will be those who get there by choice and not by chance. There is a grand design. There is a grand designer. Talk to him. Let him talk to you. That's a good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his mercy and his grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.